Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Slow and steady. Traders reassess the pace of rate cuts as Fed Chair Jerome Powell says he's not in a hurry to lower rates, while reiterating that the US economy remains on a solid footing. Israel says it has begun targeted ground raids in villages close to the border in southern Lebanon, defying international calls for restraint. Plus, Christine Lagarde voices her support for banking tie-ups as the ECB examines UniCredit's potential takeover of Commerzbank. The ECB president also gives her strongest hint yet on a rate cut this month. Good morning, happy Tuesday. We also assess as well the impacts of a strike in the US at ports on the east and Gulf Coast. The first time since 1977 could cost the US economy up to about $5 billion US per day, according to some estimates. The inflationary impact as well is a potential threat. Currently, European futures pointed to gains of 0.2% after the downside across European stocks yesterday. US markets, though, managed to eke out gains despite the commentary from Jay Powell suggesting caution in terms of the next steps for this Federal Reserve. FTSE 100 futures currently pointed to gains of 24 points. US futures, S&P E-mini is currently down just 0.1%. NASDAQ futures holding above that 20,000 level and currently flat. Let's flip the board and look cross-asset. You have major markets, of course, in Asia closed, including Hong Kong and mainland China, after that eye-watering run-up, 26% in just 6 days on the CSI 300. But closed now for the National Day holidays in China. US 2-year currently at 363 as we reassess where the Fed goes. Markets pairing some of those bigger bets back to like about 65 basis points from 75 basis points in terms of expected cuts by the end of the year. Euro-dollar in focus on Christine Lagarde, clearly opening the door for a potential additional cut this month. 111 on euro-dollar. Brent at $71.84 as we continue to keep an eye on the tensions in the Middle East, up 0.2%, and gold as well. The yellow metal at 2,639, currently up 5 points, up 0.2%. Let's briefly check on what is happening in Asian markets that are open today, and the Nikkei gaining after heavy losses yesterday. The Nikkei in Japanese stocks ended yesterday down almost 5%. Today, a turnaround, not making up for all of those losses, but as you can see on the screen, up 2%. We're waiting for official confirmation that Ishiba will become the new Prime Minister of Japan. He is, of course, the leader now of the governing party, the LDP. Japanese yen currently down 0.5%, and that is giving a lift to Japanese equities in the session today. Now, speaking at the National Association for Business Economics, Fed Chair Jerome Powell emphasised that the overall US economy remains on solid footing, setting the table then for further cuts. Take a listen.
Looking forward, if the economy evolves broadly as expected, policy will move over time toward a more neutral stance. But we are not on any preset course. The risks are two-sided, and we will continue to make our decisions meeting by meeting.
Joining us now is our Markets Live executive editor, Mark Cudmore. Mark, your assessment then of what we heard from Jay Powell. Is this a Fed chair, Mark, who is opening the door to 25 basis points versus 50 at the next meeting?
I think that's certainly how it's been perceived. I don't really think he said loads new, but I think that there was, the way it was reported was certainly the emphasis of he was going to get to neutral over time. You know, Tom, that I've been in the camp that rates markets have got way too over-exuberant in pricing an aggressive round of rate cuts that would only be justified by if there's some hidden crisis on the horizon. I think it's unlikely the US economy goes into recession. It's very hard when the fiscal deficit is this large, when the public sector is pumping so much money into the economy. It requires a severe construction of the private side, which just doesn't seem in the horizon. So therefore, I think the upside is for yields into year end. And I think in that context, Powell's comments were always going to be more likely to see a bigger upward move than a downward move because you just can't price in any more cuts. So we've kind of read a little bit of kind of stalling, changing the interpretation of the pace, but I don't think he added much new into the debate. I still think we go into a jobs market this week where the data is still asymmetrically skewed for a much bigger rise in yields than a drop. But that said, given that all year this market has been pushing for rate cuts, if we do get a weak number, particularly on Friday, then I think yields will still try to grow a little bit lower, back to the lows of the last week or two.
OK, but otherwise yields higher from here. And you have to wonder whether or not this port strike, remarkable, first time since 1977, Mark, on the east coast of the US, the Gulf Coast as well, potentially impacting with the capacity around half, up to half of all US trade. In terms of the potential inflationary impacts, the impact on that economy, how significant could this be for the economy of the US and markets?
It really depends how long it drags out for. It's a bit of a weird one because we've known this was going to happen for a long while. It was well telegraphed. There's been no real developments for the last couple of months on negotiations up until really yesterday in US time when there was a hint that there might be something. So we've been long expecting it. But I think that even though we long expect it, no one is pricing much disruption. I now think, even though it's long expected, people are going to wake up those headlines going, oh my God, this is the first time since 1977, and they're suddenly going to get a little bit worried about it. The real inflationary impact, though, will only be if this sustains for a number of weeks or a number of months. But now, there is an expectation out there, and I have no idea whether it's valid or not, but certainly in the market, when I've talked to people, they just assume that if this drags on much longer, President Biden will step in and make sure there's a resolution. He can just not afford it to be a major drag into the economy into the end of year. So if President Biden doesn't step in the coming weeks, well, then this will be a risk that is not yet priced in. It'll mean higher yields. It'll be a slowdown in the economy. It is essentially a stagflationary impulse onto an economy that is otherwise doing fine.
OK, the ball is in Biden's court. Bloomberg Markets Live Executive Editor Mark Cudmore, thank you very much indeed for the analysis across these markets. Switching focus now to what is happening, of course, in the Middle East. Israel says it has begun what it describes as targeted ground raids in southern Lebanon, defying international calls for restraint. The military has been striking targets in villages close to the border that pose what it says is an immediate threat to communities in northern Israel. Let's get more from Horizon's Middle East and Africa anchor Jemana Besetchi. Jemana, what is the latest then on the ground in Lebanon?
Yeah, well, there was speculation for weeks that a ground incursion was imminent, and it indeed does appear to be the case that these so-called targeted ground raids have begun. Now, at this point in time, it is unclear exactly how many Israeli military troops are involved in these efforts, but per the IDF tweet, they have said that their forces are striking targets located in villages close to the border that pose an immediate threat to Israeli communities in northern Israel. Local Lebanese media are citing that a Palestinian refugee camp close to one of the coastal cities in the south called Saida was also targeted overnight. And then there were more explosions heard in the southern Beirut suburbs of Dahieh as well, also being reported in the last 24 hours. Now, Hezbollah have not officially commented yet on the developments overnight, but we did hear from the Deputy Secretary General yesterday, Naim Qassem, and he was saying that the group's forces were actually prepared to fight the Israelis on the ground. He said, we are ready if the Israelis decide to enter by land. Now, of course, Hezbollah is severely diminished in capacity versus where it was a couple of weeks ago. According to our Bloomberg colleague in Israel, Galit Alstein, the Israeli military thinks it has now eliminated all but one of Hezbollah's top 11 commanders, the big one, of course, being Hassan Nasrallah on Friday. And then our colleague Dan Williams in Jerusalem is saying that Israel believes it has destroyed about half of Hezbollah's precision-guided missiles. So from what we can read from the latest developments in the last 24 hours is that this targeted ground incursion has begun, and they're specifically aiming for Hezbollah military infrastructure.
So one key question, of course, is what Israel's longer-term goals are. One analyst quoted in the Bloomberg reporting today saying, is this the beginning of the end or the end of the beginning when it comes to Israel's intentions? What is our assessment right now of where Israel goes from here and that international response, Jemana?
Well, Israel have articulated the new war objective, which is namely to restore security to the northern border and to allow the 60,000 residents who had left the border since the beginning of the war, since October 7, to return safely to their homes and not be at the risk of Hezbollah firing rockets at them. And so key to their assessment of whether they've achieved this war objective is whether they think that Hezbollah will cease to launch those attacks onto northern Israel. So you have to think about it from the perspective perspective also from Hezbollah, and whether or not they are inclined to keep pushing ahead with these cross-border attacks, or whether they're in a capacity of being less capable of launching such attacks in the future because of the blows that they've taken over the last couple of weeks, and maybe in a position to actually agree to some form of a ceasefire. Now, the question, of course, is if this ceasefire does go ahead, would that then mean that this Israel would be allowing and giving Hezbollah the time to regroup? And so that is the calculus at play here. How much military infrastructure needs to be neutralized in order for Israel to feel like they have actually accomplished their war objective. At the same time, the international community is heavily looking for a diplomatic solution here. The likes of the US, the French very actively involved as well, many European nations, and of course Arab nations calling for the implementation of a ceasefire because of rising concerns about the death toll in Lebanon, in addition to the number of displaced within Lebanon now. The Lebanese Prime Minister putting that figure at close to 1 million being spread out throughout the country, and even the UN citing that 100,000 Lebanese people have left Lebanon and gone into Syria in the last couple of days as well. So that is the situation, but the diplomatic channel hasn't appeared to have worked.
Yeah, huge numbers of civilians then impacted by this. Horizons Middle East and Africa anchor Jemana Pesechi with the latest on what could be seen as a very significant day indeed for that region. Switching focus to Asia now, where a vote is taking place in the Japanese parliament that will see Shigeru Ishiba formally elected Prime Minister. He won the leadership of the Liberal Democratic Party, the LDP, on Friday. Alistair Gale, Bloomberg's politics and economics reporter in Japan, joins us from Tokyo. Alistair, what are the expectations? He's taken the helm of the LDP. It's the governing party, expected to win any upcoming election. What do we know about this new administration?
Well, Tom, as you say, there is a vote going on right now in Parliament which will confirm Ishiba as leader. And then his sort of most immediate priority is this general election that he's called for October 27th. And he's going to have to lay out a vision really for the country. Many people didn't expect him to become the Prime Minister, perhaps even himself last week in this dramatic vote in the LDP. So he's going to have to put some meat on the bones of what his economic policies are. He's talked about continuity from the previous Kishida administration, of trying to defeat inflation, of trying to raise wages, trying to bring more economic growth to the poorer countryside areas of Japan. But he's provided few specifics on that. So what we're looking for is really for him to lay out how he's going to go about these goals that he's got. He also needs to bring the party together because it's a party that has been riven by scandals. There are lawmakers who have taken kickbacks. He may need to kind of exert his authority there and force some of them out of the party. And Ishiba himself is someone who's been on the outskirts of the party for a long time. So it's really a big challenge for him to show that he's in charge, show that he can convert his public support ratings into an electoral victory for the LDP. And then going forward, he also has other challenges, such as dealing with foreign policy. We expect him to travel to Southeast Asia next week for a meeting of ASEAN. Ishiba has talked about trying to set up something like an Asian NATO. Lots of questions about how that would come about. So this will be an opportunity for him to bring that up, to talk about what his vision is for foreign policy as well. So it's a moment in the sun for someone who's not really experienced much of the limelight in recent years.
OK, really important update as we look at live pictures then from Japan's parliament as that vote continues. Alistair Gale in Tokyo on what to watch for in terms of the potential domestic and international implications of this likely new Prime Minister for Japan. Here's what else to be thinking about today. On the data front, 10 a.m. UK time, we're going to get Euro area CPI. That says inflation data has suggested that there is a pretty comfortable glide path right now to that 2% target for the ECB, with markets now pricing in a 90% chance of a further cut this month from the European Central Bank. And certainly Christine Lagarde of the ECB seemed to be nodding to that yesterday. At 3 p.m. UK time, meanwhile, we're going to get US ISM manufacturing data, so a gauge on the health of the manufacturing sector of the US. And after the close, a touch on the consumer stateside as well, with Nike earnings crossing. That is after the close. We'll bring those for you. And as you can see, year to date, that stock has been challenged, of course, down around 20%. You can get a roundup of the stories you need to know to get your day going in today's edition of Daybreak Daybreak. Terminal subscribers can go to DAYB Go on the terminal. Coming up, President Xi Jinping warns of potential obstacles ahead for China in his first speech after Beijing's stimulus barrage. This as the country's Golden Week holiday gets underway. More on that next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, China is set to record nearly 2 billion domestic trips over the Golden Week holiday that begins officially today. The holiday kicks off just days after Beijing announced wide-ranging stimulus measures aimed at boosting consumption and hitting those growth targets. For more, I'm joined by Bloomberg's Min Min Lope, joining us out of Hong Kong, not on holiday today at least. Min Min, thanks for joining us. What do we expect in terms of the Golden Week activity? Are we going to see a pickup in terms of China's consumer?
Yeah, that's the first big test, right? Whether the euphoria we are seeing in the Chinese stock market is going to translate to actual recovery in consumption sentiment on the ground, that's still an open question. But certainly the Chinese government is expecting some 1.9, close to 2 billion trips onshore. That's a near 20% surge compared to 2019 levels. But of course, key to watch is not the total number of trips, but the per capita spending, because that has still lagged behind pre-pandemic levels. During the May Day holidays, it beat pre-pandemic levels during the Mid-Autumn Festival, though. So the question is how much momentum is behind that. But Europe said to be one big destination for Chinese travelers, with overseas flight bookings doubling according to some platforms like Trip.com, and that is some of the most robust signs yet that Chinese consumers could be returning in force, and also a key metric to watch for global tourism recovery, given that Chinese travelers are some of the biggest spenders in the past, at least during pre-pandemic times.
Yeah, absolutely. Real spending heft in previous years, and we'll see if that continues in this particular holiday. Meanwhile, we've been hearing from President Xi Jinping commenting for the first time then since this stimulus action from the PBOC and the Finance Ministry. One quote standing out to me, and he's reaching once again for those analogies with the weather, saying there will be obstacles and difficulties, every major challenge, even major challenges like surging torrents and storms. He's not sounding very upbeat.
Yeah, it is quite a somber tone here. That is a departure from his 2019 speech during the 70th anniversary of the founding of the PRC. That was a much more upbeat speech where he talked about how China's future is surely very bright. He talked about some of China's achievement when it comes to those socio-economic progress. But this time, though, aside from his usual refrains around Chinese sovereignty and its stance on Taiwan, for instance, he also added that warning about preparing for rainy weather ahead, and perhaps encapsulating some of those concerns around the geopolitical and economic headwinds that China is facing, especially with the US election. That's a very tight race that could potentially flip that risk-on sentiment to a risk-off sentiment overnight if, say, Trump wins the election in November. And of course, you had that huge rally, really an eye-popping gain of 8.5% yesterday on the CSI 300, the Chinese stock benchmark there. And perhaps some analysts are saying that maybe President Xi is also tempering expectations here, because that sentiment-driven rally in the stock market can be materialized very quickly, but the longer-term fundamental shifts in the economy, that's going to take months and years to materialize. So perhaps tempering expectations there as well.
OK, Bloomberg's Min Min Lope joining us from Hong Kong, the latest on the Golden Week and what we've been hearing from President Xi Jinping over in China. Min Min, thank you. Coming up, Christine Lagarde voices her support for banking tie-ups as the ECB examines UniCredit's potential takeover of Commerzbank. We have the details next. This is Bloomberg. Welcome back. Now, Christine Lagarde has reinforced her support for banking tie-ups as the ECB examines UniCredit's potential takeover of Commerzbank. For more on this story, let's bring in Bloomberg's Oliver Crook, joining me from Berlin. Someone, of course, has been tracking all of this for us in close detail. So, Christine Lagarde weighing in, making a comment, not specifically about UniCredit and Commerzbank. She was careful on that front, but nonetheless, it seems like a pretty significant intervention if we frame it that way. What did we learn, Ollie, from Christine Lagarde?
Yeah, listen, Tom, this was a speech that was all supposed to be about monetary policy, economic conditions within Europe in front of the MEPs for the first time since they've been elected. But of course, she didn't get very far into it. The very first question she got from an MEP who was neither Italian nor German, I should say, he was Spanish, was about this banking tie-up, this potential takeover of Commerzbank and generally banking within Europe. Have a listen to what she had to say, Tom.
I believe that cross-border mergers, if they produce larger institutions that are more agile, that have more scale, that have more depth, has lots of benefits. It's not without liability, without potential risks, but of course it is for the undertakers of those initiatives in the private sector to measure all that and to determine whether it does make sense.
And Tom, as you say, she didn't say this was specifically about Commerzbank or UniCredit, but I think it's still significant because the decision of whether or not UniCredit can elevate its stake above 10% in Commerzbank is still sitting with the ECB. What we heard from Christine Lagarde there is that in principle, she doesn't see anything wrong with it. She says that her role as a sort of supervisor is to make sure they've done everything sort of by the book and has been permitted. We haven't got that decision yet. But Tom, it's significant because this is a speech that was in many ways, I think, a lot more political than some of the ECB speakers in the past would have been willing to go into, because she was also talking about how important it is to get Europe more integrated into capital markets, into a banking unit in order to achieve some of the goals that have been laid out by Mario Draghi, which is maybe music to the ears for this new commission who have been sort of inspired by this Draghi report, but is perhaps a little bit more sort of, controversial territory for the head of the ECB to sort of wade into.
OK, so that was the first question. But of course, she was, as you say, to talk about macroeconomic policy, monetary policy. So the question about inflation and the journey of the ECB to get to that target, did she essentially, Ollie, in your view, keep the door open, at least round the door open around a further cut, a third cut this month?
I mean, certainly the market interpreted it that way. I mean, I think we have a 90% chance of a rate cut now, according to the market. That's what's priced in at the moment. And listen, she was doing kind of a victory lap around inflation, saying that how much they've brought it down, talking about the German figure that we got yesterday, which, by the way, was under 2%, 1.8%. A couple of flies in the ointment that the market's going to have to pay attention to. She also said that in the fourth quarter, inflation will come back up because of the base effect versus last year. So that is one thing you need to pay attention to. We should also say that despite the fact that we got 1.8% out of Germany yesterday, core is still stuck, Tom. Core is still at 2.7% in Germany. That is not going away. And then the third thing I think we need to pay attention to as well is we had some reporting out yesterday, got this from the Schultz team, that basically Germany expects zero growth this year. Zero growth, not any kind of recovery. We've been waiting for that German recovery for a number of years now and basically getting a confirmation from the government that that is not going to happen. And we're starting to feel that on the corporate side here in Germany, as we've seen with at least the auto sector.
OK, Bloomberg's Oliver Crook, thank you very much indeed. Let's bring you the redhead crossing the terminal right now on this strike that has been confirmed. It's underway right now on the East Coast and the Gulf Coast of the United States of America. The first time since 1977, US dock workers to stay on strike as long as needed. That is according to the union. Again, this could be costing the US economy up to $5 billion US per day, according to some analysis. Could also have an inflationary impact. We will keep across this story, get more details for you. Stay with us. This is Bloomberg. Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Slow and steady. Traders reassess the pace of rate cuts as Fed Chair Jerome Powell says he's not in a hurry to move lower, while reiterating that the US economy remains on a solid footing. Israel says it has begun targeted ground raids in villages close to the border in southern Lebanon, defying international calls for restraint. And for the first time since 1977, US dock workers go on strike at every major port on the East Coast and Gulf Coast after labour talks stall. JP Morgan estimates the strike will cost up to $4.5 billion a day in economic losses. Let's check in on the markets then as we continue to keep across the impacts and weigh that up, assess that in terms of the port closures and the strikes in the US, where there is an impact on potentially capacity for up to half of all US trade. Will the president intervene? Seems to be a key question as we watch the developments on the ground around the eastern Gulf coasts of the US. European futures pointed to gains of 0.3% after the losses of close to 1% yesterday. FTSE 100 futures pointed to gains of 23 points. A survey of the Institute of Directors, a check on business leaders here, suggesting that they're most pessimistic about the UK economy since the days of Liz Truss. US futures currently flat. Nasdaq futures currently also in that holding territory. Worth noting that the S&P notched a fresh record high yesterday. Let's flip the board and look cross-asset then. We weigh up the comments from Jay Powell, sounding pretty cautious in terms of expectations around the next move. Was he pushing back on the view from the markets that you're going to get another 50 basis point cut by the end of this year? That remains an open question. 363 at the front end on the 2-year. Euro dollar at 111. A little bit of strength coming through for the single currency, up 0.1%. Christine Lagarde of the ECB certainly seeming to lean into the idea that another cut is coming from the ECB this month. 71.80 on Brent as we keep a close eye on the tensions and escalation of tensions in the Middle East, currently up 0.2%. And gold, the safe haven move there around the yellow metal, up 0.3%. Also briefly checking for you Japan, where we're expecting the confirmation, official confirmation of the next Prime Minister, Shigeru Ishiba, who is the leader of the governing party, the LDP, expecting him to be officially confirmed as the new Prime Minister of that country. The Nikkei up 2% so far in the session after heavy losses of almost 5% yesterday. The Japanese yen helping the equity moves in Japan, currently down 0.5%. Softer yen helping the stock story of Japan. Let's get back to the Middle East right now, where the Israeli military says it has begun what it describes as targeted ground raids in southern Lebanon, escalating its campaign against Hezbollah despite international appeals for restraint. Let's get the latest from Bloomberg Horizon's Middle East and Africa anchor, Jumana Pasechi. Jumana, what is Israel hoping to achieve from this action?
Well, the key to answer that question is in the statement that the IDF put out overnight, saying that they have started what they are calling targeted ground raids in southern Lebanon, saying that they are striking targets located in villages close to the border that pose an immediate threat to Israeli communities in northern Israel. And just in the last couple of minutes as well, another comment has been put out by the IDF saying that the 98th Division has begun these targeted operations, again reiterating the language that they've been preparing for limited, localized and targeted operations. And the goal of these operations is to strike specifically Hezbollah military infrastructure that could pose a threat to communities in northern Israel. Now, there has been no response yet from Hezbollah, but we did hear from the Deputy Secretary General yesterday, and he said that the group's forces were prepared to fight and that they were ready if the Israelis decided to enter by land. But of course, Hezbollah is operating in a severely diminished capacity. Pretty much all of its senior leadership has been taken out, including the Secretary General Hassan Nasrallah on Friday in that big airstrike that took place in the southern suburbs of Beirut. And then a few days before that, many of their operatives got critically injured in those telecommunication device explosions as well. And so it is a diminished Hezbollah. And the question from here is, how will they respond to this ground incursion that's taking place? We were hearing reporting that 2 rockets were intercepted this morning, being fired from Lebanon into northern Galilee. They were intercepted, but it does tell you that Hezbollah at least trying to put up some form of a defense. But it's very clear from Israel's language and the language that the IDF have put out this morning that what they're hoping to achieve is the restoration of security on its northern border. In order for them to do that, they need to be convinced that Hezbollah will no longer be in a position where they will be firing rockets into the northern part of the country.
Jemima, what is the expected response from Iran? The sponsors, of course, the backers of Hezbollah. It's their most valuable asset, their most valuable proxy. Their proxy, do they stand on the sidelines, Jemima, or do they get involved? Do they retaliate? Is that a risk?
Everyone was waiting to see how Iran would respond to the death, to the killing of Hassan Nasrallah. And what was interesting is, again, over the course of the weekend, the language that came through was very restrained. We heard from the Ayatollah al-Khamenei on Saturday, and he was personally very close to Hassan Nasrallah. And of course, strategically, Hezbollah is a very important asset for Iran and its network of proxies around the region. Hezbollah was known as the crown jewel of this axis of resistance. But even though the Ayatollah expressed consolation and was mourning the death of his good friend, there was no imminent sign that Iran wanted to get involved more broadly in a regional conflict. Now, we have heard reports in the last 24 hours that certain IRGC commanders are being sent to Hezbollah to help them regroup, not necessarily with their military efforts, but to help them rebuild their command structure, rebuild their intelligence systems after the explosions that took place a week ago, but still falling short of getting directly involved in the conflict. And again, this comes back to perhaps what some people are saying is division even within the Iranian regime. If you listen to the language out of the President Pezeshkian, new president, but he did address the UN General Assembly last week, his tone was more conciliatory. He is looking to reopen negotiations with the West, perhaps with the view of removing or watering down some of the sanctions that have been hampering the Iranian economy, whereas the language from some of these IRGC commanders has been a lot more hardline, saying that they would look to seek retribution and exact revenge on the killing, not just, of course, of Hassan Nasrallah, Ismail Haniyeh as well, because they have still not actually taken revenge, so to speak, on the act of killing Ismail Haniyeh in Tehran as well. So Iran seems to be in a wait-and-see situation, but the longer they wait, of course, the more time they're giving for their proxies in the region to regroup, including Hezbollah.
OK, Bloomberg Horizons Middle East and Africa anchor Jemima Besetchi. An update from the Middle East on these escalating tensions. A line crossing just in the last couple of seconds. Hezbollah says it has targeted soldiers in the Israeli Metula border town. We'll keep across this story, of course, for you across programming today. Now, some other stories making the news this Tuesday and switching focus pretty radically. Shares in Rightmove closed the lowest in almost a year after Rupert Murdoch's REA walked away from its pursuit of the London-listed firm. This comes after the British property portal rejected a fourth £6.2 billion takeover proposal. Rightmove calling the proposal unattractive. Goldman Sachs has executed more than £1 billion of trades in Thames Waters bonds in September. In a note to clients seen by Bloomberg, hedge funds and distress funds are continuing to bid for the debt of the UK's largest water provider. Around £3 billion of bonds have changed hands in total just this month. By this month, we mean September. It comes as the company struggles to raise equity amid talks with creditors. UK business confidence has dropped to its lowest level since the Liz Truss fallout. The Institute of Directors' latest survey recorded that business optimism fell 38% in September. This comes amid fears of looming tax hikes and workplace regulations expected to be brought in by the UK's new Labour government. And French Prime Minister Michel Barnier is reportedly planning to raise up to €18 billion as he looks to regain control of the country's finances. According to Le Parisien newspaper, he will also push back a budget deficit target ahead of his first policy speech to Parliament later today. Eleonora Mavriodi, an economist with Bloomberg Economics, joins us from Paris with the latest. Good morning. Thanks for joining us. France's budget deficit, then, is what? It's around double the EU ceiling. How difficult is it going to be for Michel Barnier, the new Prime Minister of France, to bring it within that EU-targeted 3% level?
Well, for France, it will be particularly challenging to meet the EU rules. The current debt is above 110% of GDP. A huge budget deficit and a divided national assembly will create more challenges for the new government to propose plans that will give the necessary fiscal consolidation to meet the rules without triggering its own demise. So the rules, new EU rules, ask countries to keep debt below 60% or set it on a plausible downward path by the end of the adjustment period. In practice, for France, that means it will need to increase its primary balance by 1.25 percentage points annually over 4 years, or 0.8 percentage points over 7 years. So both these targets are very ambitious. But if they were to be implemented successfully, then they would put debt into a sustainable path. The timing is also not great. Markets have been jittery. So we've seen that the spread between the French and German 10-year bonds have widened almost 80 basis points from the pre-election average of 50 basis points. And that puts extra strain on the fiscal position. But it could also weigh on the overall economic activity. We estimate that if the spreads stay 30 basis points wider through next year, then GDP could be 0.5% lower by the fourth quarter of 2025. And that's compared to what it would be if the spreads quickly return to the pre-election levels.
So the yield premium is there, and it remains pretty pronounced, doesn't it, in terms of French assets, as you said. There was obviously, Macron worked very hard, contentious reforms around the pension system of France. Does Michel Barnier look to unpick some of those reforms? Is that an option on the table for the new Prime Minister?
Well, it's certainly still on the table because both the main opposition groups, the left-wing NFP and the far-right RN, have vowed to reverse it if they were to be elected. What we think it's a very risky move. Just to recap, the reform extends the working age and also accelerates the increase of the contribution periods. And it's expected to be crucial for the long-term sustainability. But we estimate that if we suspend the changes of the pension reform, that's technically halting the implementation of the 2014 and 2023 reforms, that will have significant implications for the fiscal sustainability and the labor market dynamics. So it would reduce the expected fiscal benefits by over 0.6 percentage of the GDP annually by early 2030, and that would, we estimate, could bring a debt to GDP 15 percentage points higher than our baseline forecast. But it could also have a big impact on the participation rates, which especially for older workers, and could bring GDP 1.2% lower by 2050 than our baseline forecasts.
Okay. Eleonora Mevroidi from Bloomberg Economics, thank you very much indeed. Setting us up in terms of what to expect from this first speech from the Prime Minister of France, the new Prime Minister, of course, and the potential economic implications. Coming up for the first time in nearly 50 years, US dock workers go on strike. It's a huge development. We're going to bring you the fresh comments, the latest from the union, and the potential implications for the US economy and the politics of that nation. That's coming up next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, major ports in the US East and Gulf coasts have shut down, with unions saying dock workers will stay on strike for as long as needed. Affected ports have the combined capacity to handle as much as half of all US trade volumes. Let's get more then from Bloomberg's Brendan Murray, who's been monitoring all of this for us, our trade czar, of course. Brendan, what happens next then?
Well, the Biden administration is going to come under increasing pressure to step in and to intervene to end this strike. We're only just a couple of hours into it, and already business groups from around the country are saying this cannot go on. This will snowball into an economic pain that we cannot afford right now heading into the fourth quarter. We just got this statement from the union. They said the employer's offer fell far short of what they want. They said we're prepared to fight as long as necessary to stay out on strike for whatever period of time it takes. So strong words that you would expect in the opening hours of a strike, but still ones that don't sound like the union is in the mood to offer any concessions at this stage.
Brendan, what is your and your team's assessment of the potential impact then on the US economy from this?
Well, we've seen estimates anywhere from $1 billion a day to $5 billion a day. These ports handle roughly 75,000 containers every day. So if you imagine if this goes on for a week, 75,000 times 7, you're looking at 500,000 containers that are going to stack up. Those are just ships are going to be anchored outside these ports, and then they have to work through. Whenever it ends, they have to work through this backlog on top of the normal flow of trade that's already happening. So it could take a week-long strike, could take a month to dig out from. So that's why the emphasis on ending this quickly, if possible, to minimize the economic damage.
Yeah, and the focus seems to be, as you suggest, that maybe the Biden administration has to step in at some point and put more pressure on both sides. This all happening, of course, in the run-up to that crucial U.S. election in November. What are the potential political implications of this then?
Yeah, exactly. The election is 5 weeks from today. Biden's in a no-win situation here. If he sides with the union, he potentially sees them digging in for a long strike and the economic pain that would come with it. If he sides with the employers, he's siding with foreign-owned companies that have made billions and billions of dollars in record profits over the past couple of years. So there's really no easy route politically. It'll be interesting to hear how this plays out on the campaign trail between Harris and Trump, whether we get a similar kind of stance from them. But yeah, the timing of this politically couldn't be worse, really, if you're the occupant of the White House at the moment.
Yeah, well, indeed. So we'll see which and how the candidates respond to this. We're seeing live pictures right now, Brendan, of dock workers striking and on those picket lines, at least with banners and boards, at the port in Philadelphia. So just one of the ports, of course, affected by this strike up and along the east and Gulf Coast of the US. In terms of what to watch for in the days and weeks ahead, do we have a sense of where the leverage lies? Clearly, union workers think they have the upper hand at this point. The response as well across the US in terms of how consumers respond to this. There's a potential inflationary impact. How do you see the chips falling in the days ahead in terms of public support for this strike?
Yeah, well, it will be interesting to see how quickly the economic pain reaches the consumers. At the retailers and manufacturers leading up to this deadline, it boosted their inventories. So you would think that there would be some buffer there for at least a couple of weeks to withstand the shock of a strike to the supply chain. But things like food and we can't sit on ships indefinitely before they just spoil and so we're looking at the consumer is really the big question here. How quickly will this lead to real economic hardship leading into the holidays? It's the big time of year for retailers, but we'll see how well they've prepared themselves if this drags on for a couple of weeks or more.
OK, Bloomberg's Brendan Murray, the analysis, the details, what to watch for as well. Really crucial story unfolding right now in the US. Brendan, thank you very much indeed. There's plenty more coming up. We're going to do a breakdown for you of what to expect in terms of the jobs data coming through this week from the US. Stay with us. This is Bloomberg.
For us, the labor market's everything now. And by the way, it's everything for the Fed.
Yeah.
So, this is the $64 trillion question. Did the Fed cut 50 because they are actually worried about the labor trends, which I think they should be paying attention to that? Or are they doing it because, look, inflation's come down and they're too tight to begin with, and so that they're able to, like, is the Fed kind of because they can or because they need to?
Morgan Stanley's chief US equity strategist right there, Mike Wilson, talking about the importance of the labour market for this Federal Reserve and the cooling that we're seeing. We're getting ADP data out tomorrow. We're getting JOLTS data as well. And then we get non-farm payrolls, of course, on Friday. So a picture of the labour market will become much clearer by the end of this week. On the ADP front and the private payrolls data that comes through crossing tomorrow, you've seen a steady move lower in terms of private sector jobs added in the US. 5 straight months where the move has been lower. Now, Bloomberg Economics expects that the number in the latest print that comes out tomorrow will be around 123,000 jobs added in September. That's after a surprise increase of just 99,000 in August. But nonetheless, the moves continue in a direction of a cooling market when it comes to at least the private sector role, the ADP print. So again, that gives you some context in terms of where the labour market is heading in the US and the cooling that we have seen. And of course, we know now that the tilt from many FOMC officials is towards the labour market cooling versus inflation, where they seem to be more comfortable in terms of the trajectory. And you heard that again from Jay Powell yesterday. Let's flip the board and have a look at this crocodile mouth-shaped move in the chart. This is the move of Chinese equities versus their US counterparts. We haven't had to say this for very long, have we? But 6 straight days, we've had about a 26% increase in terms of the equities upside for China. 26%. Closed today, of course, for the national holidays. But that gap has come through, just a 1% gain versus the US in a similar time frame. There isn't seems a filter across in terms of the US equity markets. These markets to some extent have been delinked. The economic impacts on the US from the moves higher in terms of the stimulus inputs and what that's meant for Chinese equities so far has not fed through into US stocks. There seems to be that disconnect still. Worth reflecting, of course, as well on the picture around inflation in Europe. You are heading closer to that 2% target. Christine Lagarde suggests she's pretty comfortable. At least she seemed to be nodding to that yesterday, and setting the scene for a further cut from the ECB in October. And you can see why, because inflation on the headline basis has made that move to 2.2%. The core part is still a little sticky, so that will be concern for some within the ECB. Coming up, we're going to go live to the Berlin Global Dialogue and speak exclusively with BlackRock Chairman and CEO Larry Fink. The opening trade is up next. This is Bloomberg.